Hey traders, most traders pick the wrong Lucid Trading account and then they fail to get payouts. So in this video, I'm going to break down the three main account types from Lucid. We've got LucidFlex, LucidPro, and LucidDirect. These three accounts share a lot in common, but there's four critical differences that you need to understand so that you can choose which path is the right path for you. We're going to talk about the things that are similar. We're also going to talk about the things that are different. And as a bonus, if you stick around till the end, I'm going to tell you which accounts I'm trading and then also give you some pro tips to help put you on the path to consistent payouts. So let's dive right in. I'm going to jump in here real quick with a quick disclaimer, guys. This is for education and entertainment purposes only. If you do use any of the links, it helps support the channel at no additional cost to you. Also, do your own research. Go ahead and make sure to check on things for yourself, guys. It's important to do that. Let's go. Okay, so there's three paths to live funding through Lucid. And each one of those three account types, well, they represent ultimately a different path that leads to Lucid live trading. So the first are the evaluation routes. So we have LucidFlex and then we have LucidPro, and those are both evaluation accounts, meaning you have to pass a test in order to get to the SIM funded stage, which is LucidFlex funded and then LucidPro funded respectively. And then after 6 payouts, you can move yourself over, or you will get moved to Lucid Live. They'll call you up to trade in the actual live environment. Now, the other path is the direct to funded path, the straight to funded, and that's called LucidDirect. And you can see that here on the screen. And then LucidDirect also goes, eventually after 6 payouts, you move over to Lucid Live. So before we talk about the differences in these accounts, let's talk about the things that are the same. What all three of these accounts share in common, right? All three accounts have a one-time fee. So you pay one subscription fee. There's no subscription fee. There's no activation fee. There's no monthly fees. You don't pay for data feeds or anything in these accounts. You just pay once. Whatever the price is on the website, that's the price you pay. And you don't pay again until you either pass your evaluation and you get to the payout stage, or you get to the payout stage, or you blow up the account. Those are the only two options. You can either go to the payout or blow up the account, right? You also have to place a trade every 30 days in any of these accounts. You have to have at least one trade in 30 days to keep the account active. All three accounts have a 90-10 profit split, meaning you keep 90% and 10% Lucid keeps. This is really simple. There was confusion about this. Let's say, for example, you request a $1,000 payout that gets approved. They will send you $900 and they will keep $100. That's all there is to it. So when you request the payout, it's that amount, the amount that you're requesting for the payout. If it gets approved, that's what you're going to split, 90-10. Then all the accounts also have the end of day drawdown, which is really great. This is one of my favorite things about the Lucid accounts is the end of day drawdown. So your maximum loss limit, it's going to be calculated at the end of each trading session, and it's not calculated during the day. So the system tracks your highest closing balance, and that will be where you're going to get your trailing max loss limit, trailing drawdown from. So I'll link another video here on the screen that talks more about the end of day drawdown. It's really great. It's better than the intraday drawdown. So then the next thing is they all allow the same trading platforms, which is anything from Rhythmic, which would be like Sierra Chart. You've got Quant Tower, Motive Wave, Addis, all the different Rhythmic platforms. Then they also have CQG platforms. So they have Tradeovate Prop, they have NinjaTrader Prop, they also have TradingView. All of the accounts can use any of those. There's no longer any Project X. Then there's a $500 minimum payout request. All the accounts share that in common. Anytime that you're going to request a payout, no matter what account it is a $500 minimum. And then all three accounts also have, if you need to get 6 payouts before you move to live. After your 6th payout, you will be moved to live. And those are some of the things that are the same. So let's go ahead now and talk about what some of the things are that are different, right? So number one, we've got the consistency rule and how much profit can come from your best day. This is different. Then your daily stop loss, which is your daily loss limit and how that's calculated. You've got your payout caps, which are how much you can withdraw per payout and what the rules and requirements are to get that type of payout. Those things are different. And the one thing that nobody's talking about, but this is important too, it's the amount that can be transferred to the live funding when you transfer after 6 payouts, how much you can take with you to the live funding. So let's break down each account based on those 4 factors. So LucidFlex account, this account has less restrictions, right? And it has a 0% consistency rule, none in funded. In the evaluation phase, there's a 50% consistency rule, which means that you can pass in 2 days. And then once you're funded, there is no consistency rule anymore at all. And what that means for you is that you can catch a big, massive trend day. You could have, 80% of your monthly profits in one day. It's not going to be held against you. It's totally fine to do that. And that's probably the biggest advantage of this LucidFlex account. Then the daily stop loss limit. So there's no daily stop loss, either in eval or funded. You're going to be responsible for monitoring that yourself, and you still can't breach, the maximum loss limit. If you hit the maximum loss limit, you'll blow up your account, but there is no daily loss limit in LucidFlex accounts at all. Then the payouts, which is 50% of profit with the account-based caps. Okay, so in LucidFlex, you need a minimum of 5 trading days of daily profit, and it's based on the account size, how much that is. So here's a chart real quick. It comes right from the website that shows you. So like for a 50K account, I need to have $150 minimum 5 days in order to qualify for that part of the payout for that. Then for the payout calculation, you can withdraw up to 50% above the starting balance with the maximum cap per account size. And here's another chart for that as well. So like with 50K account, you can withdraw 50% of your profit up to $2,000. So what that means is on that first payout, if you want to withdraw $2,000, you're going to have to make $54,000, and then you'd be able to withdraw $2,000. And then for the next payout, it would be the same thing. You'd have to make $2,000 more, so you'd be at $54,000 again to take the max payout, $2,000. 50% of $54,000 would be $2,000. Then the next thing is the maximum withdrawals. You can do 6 total payouts, and then you transition to the Lucid Live with a $5,000 cap carryover. So there's a $5,000 move to live cap for each LucidFlex account, regardless of the account size. So you can only take $5,000 with you to the live environment. LucidFlex account. So who is this for? Who's this best for? We've got aggressive traders who want fast payouts with zero consistency restrictions and funded. You can self-manage your risk without daily loss limits. You understand the 50% withdrawal limit per payout cycle. And then you have a strategy that lets winning trades run, looking for windfall days and statistical outliers. Okay, LucidPro account. Let's see what we got. Now, in the LucidPro account, there is a 40% consistency rule in funded. Okay, during the evaluation, there's no consistency rule, meaning you can just pass in one day. But then for the funded, the biggest single profit day can't exceed 40% of your profits during the payout cycle. Here's some examples real quick. So with a 40% rule, on day 1, we make 500. Day 2, we make 400. Day 3, we make 1,050. Day 4, we make 600. Day 5, we make 450. The total's $3,000. On day 3, it was the best day at 1050, right? 1050 is 35% of 3,000, which is less than 40%. So this particular example would be eligible for a payout. And then for example 2, let's just say that your best day is 1,230. And the same thing with a total of $3,000 in profit, then that would be 41%, and you would need to keep trading to bring the percentage down before requesting a payout. You can find out more about the consistency rule calculations on the website, and I will link that in the description. So let's move on tier 2, the daily stop loss. In LucidPro, the Lucid Scale DLL, it grows with the profit, right? So in evaluation, you have a fixed daily loss limit based on your account size. And then when you go to funded, you switch to this Lucid Scale DLL, which is 60% of your highest EO day profit. After your trailing loss limit locks, you have this highest close profit of $2,000, let's say. So your Lucid Scale DLL is 2,000 times 0.60, which would equal a $1,200 max daily loss. Then if your highest close profit grows to 3,000, then your DLL will move up to 3,000 times 0.6, which would be 1,800 max daily loss. It's basically a safety net that grows with your success. But it's important to note with this that if you start drawing down, the daily loss limit doesn't go down. It only goes up. So you have to be aware of that. If you start drawing down, your daily loss limit will still be big because it'll be based on what your highest end of day profit was. So let's look at the payout structure. It's basically, for the LucidPro, you have a payout structure where you have your buffer and your progressive caps. So your buffer rule is you must maintain your initial max loss limit plus $100 in your account. That's standard. You got 5 profitable days required, not just 5 trading days, but you need 5 profitable days with a minimum daily profit. And here's the progressive maximum cap. So for each account, for example, say for example the 50,000, as long as you make your you don't withdraw into your buffer, you have 5 profitable days. And then now if you look here, your first 2 payouts can be up to 1,500, payouts 3 and 4 can be up to 2,000, payouts 5 and 6 can be up to 2,500. And that's also, now the thing that makes this one account different, this LucidPro account is very different than the other ones, is that you can transfer up to $150,000 to the live account from the LucidPro accounts. You can transfer way more money into live from the LucidPro accounts. So that's something to consider for sure. Okay, so LucidPro account, who is it for? It's best for the traders who are conservative and want the safety net of a daily loss limit that grows with the profits. And then they don't mind the 40% consistency rule, which really is pretty generous. 40% consistency rule is pretty good. And then they prefer the structured payout progression, and they want to transfer as much money into live as possible. This is the account you want to pick if that's what your goal is. Okay, so then LucidDirect account, which is the instant funding option. Let's take a look at this one together here real quick. We've got the consistency rule, which is 20%, which is the strictest by far of all of them. It's hard. There is no consistency rule in the evaluation because there is no evaluation. Your biggest single day profit cannot exceed 20% of your total profits. And here's an example with a 20% rule. If your best day profit is $1,000 and you need at least $5,000 total profit to request the payout, the calculation would be $1,000 divided by 0.2, which would equal $5,000 minimum. So basically that's saying that this forces the distributed trading across many days and prevents one-hit wonders. Okay, let's look at the daily loss limit for the LucidDirect. Now, daily stop loss has the same thing. It's the Lucid scale. It grows with your profit, and it's a fixed daily loss limit until you surpass the initial trail balance, just like in Pro. And then you transition to the Lucid scale DLL. And this is what the initial trail balances would be. So for a $50,000 account, you'd have a fixed DLL of $1,200 until you hit this initial trail balance of $52,100. Once your max loss limit locks, then you move into the Lucid scale daily loss limit. So let's look at the profit goals and the progressive caps, the payout structure for this. There's 8 trading days per payout cycle in the direct accounts. So you have to hit your profit goal for each account size. There's 25,000, 50,000, 150,000. You have to hit the first profit goal and then the subsequent profit goal, 2 plus 2 through 6. It's all the same. And then you have a cap to how much you can take out for payouts 1 through 3 and payouts 4 through 6. So each time that you take a payout, these numbers reset to 0. You have to hit the profit goal again. And then you have to, once you hit your profit goal again, and your trading days, your 8 trading days again, then you'll be eligible to receive the next payout. And then the maximum amount that you can move to live per account varies on the account size in LucidDirect. So there's 2,500, 5,000, and 15,000, depending on the size of the account that you started with. So who is this best for? All right, this is best for people who are experienced and you have capital available to do this. You value your time over money because there's no tests. You don't have to waste any time passing tests. You can consistently distribute profits across 8 days to meet the 20% rule, and you're confident enough to invest up front. Okay, so let's do a little side-by-side comparison now that we have some of this information here together. You can see that the consistency rule, so the 0% in LucidFlex, 40% in LucidPro, 20% in LucidDirect. Daily stop loss, you got none in funded, in LucidFlex funded. In both LucidPro funded and LucidDirect, it is the Lucid scale, which is the 60% of the highest end of day profit after your max loss limit locks. Okay. Payout structure. 50% of profit capped by account size for 5 days. That's what's going on in the LucidFlex. And then for LucidPro, you have the buffer plus 5 profitable days. It's also, you can't withdraw into the buffer. You have to have 5 profitable days. That's just like Flex 2. And then for LucidDirect, you need to hit those profit goals, and then you need a minimum of 8 trading days. So let's look at what the maximum withdrawal amount would be for a 50K account. Now we're just going to use this as the baseline. That's what most people get. So to withdraw from the LucidFlex account, to withdraw the maximum amount, you would have to make $14,000 plus $3,000 for the test. That's $17,000 to withdraw $12,000. So it's $12,000 is the sum of the 6 payments, the maximum you could take. Now for LucidPro, it's a little bit different. You've got 14.1K, which is that $100 buffer, plus 3K for the test. So you're still at 17.1K to withdraw 12K. So it's actually pretty similar. And then the LucidDirect one, it's a little bit more. It's 15,500 to withdraw 13,500. That's how much money you have to make to withdraw that amount. So it's pretty close. It's actually not so bad, right? So then there's the transfer to live. For the 50K account, you can do 5,000. For the LucidPro, it's up to $150,000 across your accounts. And then LucidDirect is 5,000 for the 50K size. They all have end of day drawdown. and the entry cost is relative. So like for the Flex, it's low right now because they're on sale. The Pro, it's medium, and then the LucidDirect requires more capital investment up front. Okay, cool. So let's just do this in simple terms. LucidFlex, no consistency rule and funded, no DLL, self-managed risk, and you can let your winners run. You need 5 winning days to take the payout. In LucidPro, which is the balance, you got the 40% consistency rule. The DLL grows with your profit. There is a buffer requirement. You need 5 winning days, and the payouts are capped. Okay, LucidDirect, instant but strict. You got 20% consistency. The DLL grows with profit. You got to hit your profit goals. 8 days of trading. Your payouts are capped. Also, it's important to know the payouts are capped on LucidFlex too. They're all capped. So, which one should I choose? Right now, I think you should choose LucidFlex if you want 0 consistency restrictions on your best trading days. You can handle trading without a daily loss limit safety net. Speed to payout is a priority for you. And you're disciplined enough to protect your end of day max loss limit independently. You also don't want to maintain the payout buffers. That's who would pick LucidFlex. Now, we would choose LucidPro if you want a daily loss limit that grows as you profit. If the 40% consistency rule gives you room for the bigger days, it's still pretty good. You like having guardrails while you build your track record, and you don't mind maintaining that buffer balance. And most importantly, I think for pros, you want the maximum balance transfer to live as possible. So who chooses LucidDirect? Now, LucidDirect is you have capital available and you want to skip your evaluation entirely. You can consistently spread profits across 8 trading days. The 20% consistency rule doesn't really concern you. You're experienced enough to meet profit goals reliably. And there's more your time is more valuable than the premium entry cost. So right now, the Flex accounts are currently on sale. They're 40% off for all of them. And this is going until December 3rd at 5 p.m. Eastern. Use my code RTF. You can get any 5 evals. You get 1 free reset. The Flex accounts have the no daily loss limit, no consistency and funded, no buffer. And that's my pick also. So here's some tips that I want to give you guys here at the end, just so that you can have these tips from me to help you with these accounts as you're trying to pass them as you're going forward with them. Calculate your MML daily. Know exactly what your max loss limit is before trading each session. All right, use hard stops. Do not rely on mental stops. One runaway trade will ruin everything. It'll ruin everything. Respect your consistency rule. So that means in LucidFlex, trade freely. LucidPro, you keep your best day under 40%, and in LucidDirect, you have to keep your best day under 20%. So here's my final thoughts. Like how much, this is really what you need to consider when you're picking your account, is how much consistency restriction can you handle? If you can't handle any, then you go with LucidFlex. But at 40%, LucidPro, 20% LucidDirect. The smaller the number is, the harder. So do you want a daily loss limit safety net? So no limit, you could do LucidFlex, or the growing limit, you could do LucidPro or LucidDirect. What payout structure fits your goals? Do you want fast with no buffer? So then go with LucidFlex. Or do you want the buffer with the progressive caps? You can go with LucidPro. Or same thing really with LucidDirect. How much do you hope to transfer to live? Is it like $5,000 per account? Or do you want to try to, transfer the maximum amount you can, which would be $150,000 with LucidPro? Those are things to consider as well. Now, I'm personally going to go with the Flex accounts. I'm going to do the LucidFlex account. I like that they're on sale right now. That's definitely part of the decision process, but I want you to know that if you use my code and the sale is no longer on, you will get the best discount that's available right now. But it really is up to you, ultimately, what your goals are with your trading and what style trading you're using, what your system calls for. Which one sounds good to you? Let me know. Drop a comment down below. Also, if you found something valuable here, please hit the like button, subscribe, ring the bell for more prop firm breakdowns. Stay disciplined, protect your capital. I'm going to see you on the next one, okay? And if you watch here, here's some more videos on Lucid Trading for you to watch.